In less than 3 weeks, corn and soybean farmers will need to finalize their crop insurance plans. As you'll see in our feature with Rob Heyen from Crop Insurance Solutions, that decision for some farmers begins with one common question.
You know, a lot of times it's what's everybody else doing?
And the answer for some is waiting.
But this time of year, one of the big problems for me with crop insurance is every farmer has to make up their mind by March 15th. We don't know the final price until March 1st.
As corn and soybean prices at the elevator remain elevated, protecting them is arguably as important as ever. Even with uncertainty in final insurance prices, Heyen says farmers can still be planning ahead.
It's good if they know what their history is, what their APH or actual production history is, because that's ultimately what will determine what level of coverage they should look at, how much risk they can manage effectively with crop insurance.
For the state as a whole, that risk is high. Nebraska insured more net crop acres in 2011 than in any of the last 15 years on record. That includes covering 90% of corn and soybean acres planted. As those acres increase, so does the technology to improve yield on them. That can now be reflected in features under this year's plan.
There's a thing called a trend yield adjust, which is going to allow farmers to actually increase their APH or their average about 5 to 7%, which is really good. So in other words, if you have a 200 bushel average on an irrigated farm, you'll insure it as a 205 to 210 bushel average.
Trend yield adjustment aims in part to show current yield potential due to improved genetics and practices. Heyen says another possible benefit farmers in certain parts of the state may want to look at this year is enterprise units.
If we're able to use enterprise unit, that means I've basically thrown all my acres of one crop together within a county, and it is so much less expensive to use that type of coverage. In fact, for an example, I can buy an 80% enterprise unit policy for about the same money as a 70% optional or farm-by-farm policy.
Heyen, who also farms near Milford, says enterprise units work well for him with all non-irrigated farmland. But in mixes of irrigated and non-irrigated, the option may not necessarily be as good. Above all, there is one thing he urges farmers to consider with this year's coverage.
Hail and wind, especially wind, and production wind is just going to be crucial. And those that had it last year really benefited. Production wind just means it's like a multi-peril policy stacked on top of your federal policy. It's guaranteeing bushels, but against one or two perils, hail or hail and wind.
And as no farm or farmer is the same, Heyen says each should look at what's best for an individual situation.
Bottom line, it's all about analysis. An agent must be able to look at a producer's history, understand their risk management needs, both real and perceived, and then address those needs. So it's all about analysis.
If you have questions about your crop insurance plan, remember to talk with your agent before the March 15th deadline.